Welcome to the IRS Guidance on COVID updates for the week ending May 8th, 2020. My name is John Sheeley. I'm here with Ellie and Fred. And welcome and happy Friday wherever you are. It's morning for some of you, afternoon for some of us as well. And I guess for some of us, it's really early in the morning. What's going on, guys?
I'm enjoying some coffee.
Yeah, her New York coffee.
I'm having some coffee and getting ready for the Whiskey Friday hijinks to occur.
Ellie, do you have your F5 sign? Because Tim Mansour can't hear.
I actually pegged it to the top of the chat.
And when they first...
Obviously, he didn't pay attention to that.
Well, he might not have clicked on the connect to audio when you first log in, because that's the first thing they got to do when you come into these things.
Or you hit the speaker.
Yeah.
We've encountered that where people call up and, do you have speakers? No. Did you turn on the speakers? Oh, no.
Are we allowed to be snide and snarky about that yet?
Fred is wearing a Yankees jersey for those who asked, the best team.
There you go. Baseball season hopefully coming soon.
Yeah, to a city not near you, right? All right. So this is we think we're going for 100 hours.
100 hours?
100 minutes, 100 hours, 100 minutes. You'll be issued, if you qualify, 2 NASBA CPE, 2 IRS CE. Not on the list here. We are awarding CTEC if you told us you need CTEC. The IRS, I do their quarterly conference, and they told us the other day we're actually supposed to be asking 3 questions per hour. And the guy who last audited us for compliance was the guy who made the comment. So I said, gee, I better listen. So there will be a total of 6 questions. You need to answer all of them to get credit. IRS rules, not mine. You need to be logged in for 100 minutes. IRS rules, not mine. We can't make exceptions. I thought I'd change this. Partial hours can be awarded. I thought I pulled that out. You can get 1 hour or 2 hours, depending on how many questions you answer. Certificates, we ask you to give us a week. Nicole is a lot more efficient than that. You'll get it in a couple of days. But before you assume it's missing, please give us till next Friday. And then you can either email Nicole at taxpracticepro.com or call the office, and we're happy to help you. Nicole, I was going to call Ellie Nicole. Ellie.
Before we get started with the syllabus, I just wanted to let everybody know who's using the Big Marker platform, maybe for a class with us that you'll be taking soon, or, if we continue doing the updates. When you register for this class, you will get a pop-up, or it'll open a new tab or window, which will have your individualized link that you need to save for this class. When I see it, it usually has a thing that says, do you want to add this to your calendar? And I click the Google Calendar. I think it also has Outlook on there. That way you're not scrambling for the link the day of. I believe Big Marker's supposed to send out email reminders, or we're working with them to make sure that they do. So that's just a pro tip for the future. Moving on, today's syllabus includes some IRS updates, particularly about some tax law, the stimulus checks. Yes, I know it's called an economic income payment. I'm calling it stimulus checks because that's what my clients call it. We're going to talk about IRS operations, and then we're going to talk about what we know for the SBA loans, which, we're all learning at the same time. So, EIP, stimulus checks, and refunds, what we know right now. IRS has said that you must return certain checks to sender. The stimulus checks sent to taxpayers who died before the receipt of the payment should be returned. This is the same position for incarcerated individuals. If the payment was made to joint filers and the living spouse received it, they must return a portion made on behalf of the passed away taxpayer. Couple is married. They get $2,400. The spouse must send back the $1,200 if their husband or wife is no longer here, if they've shuffled off the mortal coil. These are published in the IRS FAQs, which is not the Internal Revenue Bulletin, so it may be subject to change. And we're going to talk about that. If somehow the living spouse or the estate received a paper check, you need to write void in the endorsement section and then include a note saying why you're returning and then mail it immediately. If it was received in cash, like let's say Mr. and Mrs. Riddle cashed the check that included income for both her and her husband, or it was direct deposited, the taxpayer who is alive needs to send a check or money order payable to U.S. Treasury with 2020 EIP in the memo line and then the Social Security number of the dead person. You need to explain why it's being returned. So, for example, Tom Riddle Sr. died on July 31st, 2019. I am including, I'll go back. Some of the mail is getting this. There's a little box on the envelope. You can check it and then drop it back in the mailbox and it'll be returned automatically. The slides beforehand are the addresses of where to mail the check to if you have to mail back a payment.
Ellie?
Have that. Yes.
Ellie, somebody mentioned something about FAQs as substantial authority. Can you go over that real quick for them now before we move forward?
Do you want me to jump ahead to that slide?
No.
It's a couple of slides ahead. We go into that, so just give her a bit.
We do go into that, so no worries. If you can please wait. We're going to get to that. And it's got a really fun picture to it. IRS is updating the FAQs frequently. I put a link for the EIP one, but I also put this nice screenshot here. You can see when they're updating things. So if you just want to, one day scroll through it and be like, oh, I wonder if they've updated it. Just look for these added or updated on the side and it'll tell you when you do it. Oh, Phyllis Joe Kuby has said that the address for the Andover is wrong, which I took from the IRS website. They've corrected it now. It's 310 Lowell, not 1310 Lowell. Lowell, Massachusetts.
Lowell.
I don't know how to pronounce things from Massachusetts. So I have a quibble, and I'm not the only one with a quibble. My hero, my Stein, Nina Olson, also has a quibble about having to return these payments. So the one for the prisoners has a vague statutory authority in the past where people in prison can't get these sorts of things. And where they're taking it from is in the CARES Act, where they said, we don't want these SBA loans to go people who are in prison. We don't want them to benefit. So the idea is that IRS read that and they applied it to the stimulus checks. However, there's no clawback as it's written into the CARES Act. And what my girl Nina Olson said, it may be the IRS made a mistake by making the payment to a deceased person. And P.S., we know that from the past. They've done that when they did this in 2008. It can certainly ask folks to give the money back. I don't see the legal authority for adjusting it on the 2020 return. She also doesn't see the legal authority for returning it, and we do know she's pretty amazing. So this leads us to the question, with no clawback and no tax, how will IRS go after people who don't return the checks, and will it? Nina said that she doesn't think, Ms. Olson said she doesn't think that they'll do that because the money and time it will take to go after those checks is just not worth it. But I mean, it's hard to know. Obviously, one thing to think about is, not everybody watches the news. Not everybody pays attention to their social media isn't full of news links. So will you communicate this with your clients in an email blast? Yet another email about COVID-19 stuff, which they might ignore. I don't even think I read mine anymore. I'm just like, trash. And remember, I've been seeing the same question going around. Any excess will not need to be repaid. Any shortfall will be refunded in the 2020 taxes. The Get My Payment updates once every 24 hours. Congress has rumbles about a round 2 of stimulus checks. I know, for example, Sherrod Brown has said that he thinks there should be more. He's a senator from Ohio, but there seems to be a lot of resistance to that right now. I see a question. One moment. I don't know. Martha Perry, the Taxpayer Advocate Service has a thing on their website that someone can go through if they have questions about how to get their economic income tax payment or their stimulus check if their taxes are still being processed. You can walk through the guidance on their website. They, however, will not help people get their stimulus checks. So do not refer people struggling to get their stimulus checks to the Taxpayer Advocate Service. They will not assist. Okay. Refund delays. I've been seeing this a lot. There was a news article about it yesterday. 5 points to your house if you can tell me who that person is. So we know paper returns are not being processed. They're just sitting there. There are reports of there being refund delays on e-filed returns. And we know that there's an issue with taxpayers who need to reach out to the wage and verification unit because that unit is closed. It is one of the departments that the Treasury has prioritized reopening so that they can get people's refunds processed. Yes, Moaning Myrtle, 5 points, Gryffindor. If, however, you are sending money to the IRS, Fred has said that that's being cashed quickly.
Yes, they are.
So they will take your money, but they're not giving it out. And also, they have stopped some offsets, clients of mine, and I had found this language somewhere last month. Clients of mine who owed on student loans were still getting their full refunds. It's taking IRS longer to process, but as part of CARES Act, they apparently aren't withholding for back student loans. So people who are worried about filing now because they owe on their student loans, they can go ahead and file now. It shouldn't be withheld. But if it is, they can always call the Treasury offset and have it refunded to them. I think they have to call their loan borrower, though. And so one of the things we're seeing is that people who have a lot of credits like EITC, child tax credit, additional child tax credit, their refunds are taking longer. And, it's because there's really no one there to review it. So we're really not sure what's happening there. Fred or John, do you guys have any insight?
Insight on what? The offset?
Credit verification unit, income and wage verification unit.
I've pretty much heard the same thing you've heard, but it's nothing official, just they've stopped.
That is not me, you guys. That is Shirley Henderson.
No, it's baby you.
All right. So that does it for me. So, John, you are up.
John has just spent the last 15 minutes sending people links. So please, when you register, and Nicole is doing it too, please, when you register, save the link to your calendar.
And come early. Come 15 minutes early and test these links and not at the start time.
Well, it's funny. No, I wasn't Facebooking, Mark. Actually, from 10 minutes up till 5 minutes up. The other thing is I'm getting 2 email addresses, the Facebook page, the website, texts, Facebook Messenger. It's crazy. But we're doing a good job. So the IRS is closed, in case anyone hasn't noticed. They had intended to open up starting April 27th, and they actually did. 10,000 people reported to work. Kansas was the big center that opened, and of course they had someone test positive for COVID-19. So what did they do? They closed. Some other issues are coming up that we had reported in the field. The IRS had previously advised, and we mentioned in a previous class, that in fact, folks they didn't want to make their deposit, they didn't want to make their payments on installment agreements. They didn't have to. But what they needed to do is tell their bank to stop. The IRS couldn't stop them, and of course, now people are getting IRS payments. The handouts are all there, kids. There's 4 handouts. They're all shared. So if you click the handouts button, you should be able to get them.
Some of the things when they went into PDF format did not print correctly. They did not PDF right. So I am uploading them into like GDocs. I'm going to put
what didn't, we tested all of them. What didn't open correctly?
The one that's document.pdf. No, that one came fine. Sorry. The PPP loan forgiveness calculator.
No, it opens up fine.
Not for me.
Well, we can always send them out later if we need be, right?
Right. Yeah. Let's not waste resources on that right now. But we tested them. They all do open in the current version of Adobe and
Excel.
Adobe.
Marriott has a question about, is there any way to push refunds through if they're due a refund? And John?
If they're due a refund from what? If you e-file, is it e-file return or a paper return?
They still haven't received their refund from a return that was accepted on March 26th. So we're not even 6 weeks from that.
Was there an ID theft issue with it or no? I mean, an identity test or any letter at all, or it's just a regular filed return?
Marriott, what do you got?
So, I mean, the answer would be that you, I would go to the local taxpayer advocate and say that it's a financial hardship, and they might be able to help. But of course, as has been previously said, and I think it was in the National Taxpayer Advocate blog, unfortunately, some of the departments they need to access aren't open. So they might agree 100% with you and tell you, well, as soon as this department opens, we can push the money through or push the case through. So I would go, if it's definitely a financial hardship, I would go to the advocate and see what happens. I think generally speaking, we've all seen a slowdown on return processing, mostly because they're pushing out 160 million checks. So everything is now taking longer, which I think we know. If you have an access to a TCO, an RO, or an RA for a case, you should be able to access those people directly. They're working from home, and certainly if the case is open and they've contacted you. Now we're getting into an interesting case with sending stuff certified mail. It's almost not worth sending anything via mail right now because sadly everything is sitting in trucks on the IRS campuses. We have no idea when they're going to process things or how long it's going to take. In fact, we're hearing cases. I haven't had any mail returned, but we've heard more than a few cases that mail was returned. Taxpayer advocate wait times are outrageous. It's the squeaky wheel gets the service these days with giving them a call and pushing through. An idea here is that you should only be sending it to the advocate if, in fact, it's a financial hardship, and then you should clearly indicate that it is a financial hardship.
Susan, I had answered this in a private thing. IA means installment agreement. Yeah, so when we're talking about IAs, we're talking about people who set up plans to pay prior year taxes or pay out their current year taxes over a certain time period, more than 4 months.
Okay, so back on here. I still think we need to go to a 1 hour just live, do questions for people probably. All right, so the lien and levy departments are open. I believe they are all working remotely, but if you need to get a lien or a levy released and you have the proper documentation, or certainly if you're trying to do a sale of real property, you need a levy released, by all means use these fax numbers. Keep something in mind that some of these folks, when they call you back, might be calling you from home. So if you're a person like me, I don't answer anonymous, restricted, any of those type phone numbers. Sadly, you need to right now because it might in fact be someone that you've instituted a call to. New York State Department of Labor has been warning people with that too. So how about getting transcripts? Number one problem, I want to work with a new client. I can't get a transcript. What are we going to do? Well, e-services is down. They're not processing powers of attorney. I have, I don't know, probably 20 that are outstanding since before they shut down, and they're not processed. I use, not to plug it, but I'm going to plug Roger Nemeth Tax Help Software for a minute. So once the power of attorney is on the CAF, I can see the transcript. So I'll know once CAF is open because I'll start seeing some of those old powers of attorney get processed. But in the meantime, if you have a client and you urgently need to get a power of attorney, You shouldn't do this, but you can direct the client to go to the Get Transcript feature on irs.gov. And that might mean having them sit down next to you right in the office and do it with them. I just wouldn't do it for them, because you get that nice warning that says what, Fred, about trespass?
Do not trespass.
Right? You're trespassing on the federal system and blah, blah, blah. And they're all hot over people who shouldn't be looking at whether you got a stimulus check using the IRS website for that. So if the taxpayer has a cell phone in their own name, you can, in fact, get them authenticated right there on the spot, just like when all of us had to authenticate a few years ago. And they will send along that, they'll be able to access that transcript in their account immediately. You won't be able to, but the client will. They can print it out for you. Now, previously, we had been saying that if your client didn't have a cell phone in their name, and let's face it, folks have those prepaid phones, the phone is in their brother's name, their mother's name, their business name, they won't be able to authenticate, and they would get that in the mail. They would get that code, punch in the code, you'll be able to go in and access. Well, sadly, just like everything else at the IRS, the computer is down. Not down. I guess there's no one there to put paper in it or mail it out or whatever. So they are no longer sending out those codes if you need to authenticate on the website. So if your client has a cell phone in their name, this might work for you if you desperately need to get a transcript. So there's a lot of speculation out there about how the IRS is going to reopen. And we are now closed longer than any of the previous federal shutdowns. And in fact, they hadn't planned this very well because they didn't know it was going to happen. It wasn't on the radar that it could happen. And I think that moving forward, the world is going to be a different place. So what's going to go on? Well, practitioner priority service and the 1040 numbers are going to probably open last. Any ideas, my fellow panelists?
I've got no clue on when they're going to do it. It's going
I mean, about why they'll do it last.
Well, because that's going to be the most calls and the least important people.
Well,
in their eyes.
Everybody's important, but they're going to be calling up, where's my $1,200? Where's my $1,200?
Mm-hmm.
They're significantly behind on regular mail. There's speculation that the CAF fax numbers are going to actually open after CAF has employees, and that makes sense. Again, it doesn't make sense to take new work when we're still behind on the old work. So they're going to start processing all of those old powers of attorney. I'm just hoping somebody doesn't decide that a whole truck needs to disappear so they can get caught up.
That might happen.
Stranger things have happened in the past, right?
No.
But a thought is that they're going to have to reconfigure the CAF units. They're going to have to reconfigure most of the IRS. So in the past, if you had a room where 20 people could access secure computers and do the work, maybe only 10 can now under these new CDC guidelines. So it's going to be interesting, even when they open, how much time will be spent reconfiguring, and then they be working at a reduced workforce.
I know this doesn't apply to the IRS, but earlier today I was speaking to a gentleman in the Offer and Compromise unit of New York State, and his feeling is that when the state sees how much money they can save with people working from home, we may see more of the, at least on the state side, workers working from home for the government.
100%, as long as they can work out the technology, right? But in the short term, you can make a small investment in technology and save space. And speaking strictly from New York State, if you remember when Cuomo first came into office, what did he do? He closed all the stuff out in Menands, right? All that, he had saved $7 million a year by terminating all the leases and making everyone work downtown in buildings that they already owned. So yeah, they would, I can see them doing that and fighting the unions. So if you don't use tax help software, or something like it, there are other tools out there. As you move forward and you want to make your business more remote, more ability to access remotely, tools like this allow you to monitor what's going on. And I'll know once they're processing powers of attorney, because I'm going to see things previously submitted start to come online.
And John, should we also do a poll now as well, sir?
Well, you know what? If I wasn't helping about 50 people get in, I would have done a poll by now. So it'll be a minute till we can do a poll.
Sounds good.
Coming up. Okay. So I love everybody. You know how everybody's an expert, Fred, on the law, psychology, and taxes on the internet? Lately, everyone's becoming an expert on CE provider rules for me. It's great.
That is correct.
So to answer the question, what are some of the tax help software? What's his website? AuditDetective.com?
I believe so, but if you Google THS, it should pop up as well.
Someone can do me a favor, pop up Roger's website so you can look at the tools. He's doing free webinars to show you how to use the product. It's super cool, by all means. So I promise when I'm done with my section, I'll give you a polling question. So settlement days and appeals are now going to try to be done remotely. Unrepresented taxpayers that are working without a paid professional, let's say self-representing themselves or working with folks in the low-income taxpayer clinics, are going to be able to work towards resolving their U.S. tax court cases. Amazingly, the federal government is going to switch to virtual days in an effort to help the court receive free tax advice and possible representation from the LITC or other pro bono organizations. Here in New York, we're super lucky. We've got Frank Agostino working that nobody's behind. Tax court isn't behind, but I hear in other places they can be as much as 2 years behind on some of these cases. Docketed cases in Detroit and Atlanta are already set up in May to be done virtually, which is awesome. May 9th in Detroit, May 21st in Atlanta. You know what I didn't see? Ellie, they're not going to make those publicly available though, right?
No, you have to get an invitation for each one. They've sent invitations out to about 100 taxpayers each.
Okay.
The last bullet point is important because if you are going through the appeals office, the independent appeals office, as part of the, not going to tax court, you can participate in the settlement day, but you have to reach out to your appeals officer and ask for the invitation.
Where I was going with this, that's important too. What I thought was neat is most of us have never done this, but you can actually go sit when they do the calendar call, and you can sit there and watch the tax court happen before your eyes, and it's kind of cool. But I was hoping they were going to do it virtually, that more people would see this, more people would get interested in being a tax court professional. The exam is coming up this fall, I assume. I assume they're not going to cancel it, so just something to think about. All right, Ellie, this is back to you, right?
Sure. So 5 points to anyone in your house if you can tell me what this is. There's been some interplay between the Joint Committee of Taxation and IRS about different interpretations of the law. So a couple years ago, my girl Nina Olson did a nice blog post about, how there are three buckets of real authority when looking at things for what counts when you're trying to figure out what you should do. The first thing, the very top, is, regulations that are published in the Federal Register. And if those of you who visit the Treasury page for the SBA loans will notice that the FAQs and stuff that they had published originally as Word docs are now appearing as pages out of the CFR. Code of Federal Register. Whoever said McGonigal, you are right. I think your name was Colleen. Give me your house. That's the very top. And then you have official tax guidance, which the IRS says, which IRS publishes in the Internal Revenue Bulletin. So that FAQ I was talking earlier about stimulus checks for deceased people, that's not in the IRB yet. So then you drop down to unpublished guidance on that one. Other items included in official guidance are revenue rulings, revenue procedures, notices, and announcements. So yesterday, IRS sent out, I think it was a revenue procedure for international tax people about days abroad. 5 points, Gryffindor. Where are my fellow Ravenclaws? Come on, guys. They also send out RPs and RRs through your email. If you have not signed up with IRS to get emails yet, I totally recommend doing it. And then you have unpublished guidance. This information you can't really rely on. And that's tax forms and instructions. Pops up all the time. Pub 17 is not an official guidance. So if you see something in Pub 17, you have to go somewhere else to see if it's true. Press releases and FAQs are considered non-published guidance. Now, you can use this information when you go, like, let's say you're being audited and you're like, oh, I relied on this. And then the auditor has, some discretion on penalizing you if you've taken an incorrect tax position. So always try to look for things that are published in the Federal Register or the Internal Revenue Bulletin, and then revenue rulings, revenue procedures, notices, and announcements. I know things are crazy right now because we're getting information super fast. And that is actually something that Nina Olson also said. She's like, IRS was given a lot to do. They're doing it with less staff than they normally do, and they're trying to roll it out as fast as they can. So a lot of the things from the FAQ are going to be adjusted, which means we have to be really flexible. We have to be checking them. And if you're not getting the emails from IRS, need to sign up for them. Remember, when we started this back in April, they told us independent contractors could be considered part of payroll for the PPP loan. And then they changed it. And then they changed the rules for Schedule C PPP loan applicants. They're changing things every week. They changed the things this week on employer retention credit, which I think is coming up next. Like, I literally had different slides this morning and I had to change it because IRS changed their position to be in line with what the Joint Committee of Taxation had.
And that was not because of either John or myself. That was simply because of the IRS.
No, IRS changed. Like what I had before matched the FAQ yesterday. They updated it today. So signing up for the emails is really important. And like I said, I'm not sure the best way to communicate with your clients because I know that I'm not reading all my emails about COVID-19. So you might want to think about targeted stuff. For example, on retirement distributions, I know several clients asked me about them. As soon as IRS rolled out their information last week, I reached out to them individually. And if you have staff, you can assign that out. And yes, the tax court exam was pushed from November of this year to fall 2021.
Did I see that? I missed that?
That just occurred
yesterday. Somebody talked about it yesterday.
Wow.
So, moving on. Retirement distributions. So as a reminder, the CARES Act indicated an individual can withdraw up to $100,000 as an early withdrawal from a retirement plan. The early withdrawal penalty will be waived if it's a COVID-19 distribution, and everybody has two options. Excuse me. You can repay it within 3 years, which then it'll be treated as an eligible rollover, or taxes paid ratably, that is equally, over 3 years. Those are the two options for retirement distributions. IRS updated the FAQ on this. When I was doing some research yesterday, Fidelity Investments posted that 164,950,000 individuals under 401ks and 403bs have taken care distributions. That's a lot of people. Mm-hmm. And that 3,256 of those people took the full $100,000. Excuse
John,
me.
are we announcing the polls as we do them, or are you just going to throw them up and people?
Just till we get caught up. If they're paying attention, it shouldn't be an issue.
They should be paying attention. And Ellie, quick question. Marissa was asking how people sign up for the IRS emails. Could you just jump on that real quick? Or I can look it up while you're talking.
I'm going to post the link in the chat right now.
Awesome.
IRS.gov, e-news subscriptions. Kathy just posted a link for the tax court thing. Thank you, Mr. Wong, for posting that as link as well. Good
and
stuff.
Mark, stop eating. Stop eating, Mark. Get out of the cold.
Thank you to everyone for publishing, for putting up Roger's stuff. He's a good friend to us. He does a lot of free CE. If you haven't heard him speak, you should.
He does a lot of free webinars on CPA Academy as well. So
and they're nice guys too. ASTPS. If you look at astps.org, he does a lot. He does a monthly one. They do one free every month. He is a frequent speaker there.
And yes, Ms. Martin, you are right. As tax professionals, we should not be relying on Pub 17 as a substantial authority. We should have a better sense of what we're doing and where we get information from. And for those of you, Roger Nemeth is also doing things with CPA Academy. He did a couple free ones last week. So the poll has closed. John, do you want to throw up the results?
Nah, they weren't.
Everybody got it right. Almost everybody got it right, anyways.
John's not into the polls much today, so we're just gonna,
It should be returned to the IRS. The only the two that bother me, a couple of folks said it can be kept. A couple of folks said it should be turned over to the estate of the decedent. Yeah, both of those choices would not be in the best interest of everyone.
Henry did want me to remind everyone that even though IRS says that you have these options for retirement distributions, your state may not follow along. So if you take $100,000 out and you want to pay it over 3 years and you live in New York State, that might be like, sorry, babe, you got to pay on all of it now.
Yep.
And one thing to keep in mind with these distributions is you need to be falling under one of the qualifying conditions. You just cannot take out the money because you want to do a brand new kitchen in your house. It doesn't work that way.
And we're going to get there in a minute. The retirement companies are planning on issuing 1099-Rs. So if you call them and say, I need to take a COVID-19 distribution, your client needs to be aware that they will be getting a 1099-R in the mail. To help report the position your client's going to take federally as a result of these distributions, IRS is creating a new form, 8915E. That's coming out in the fall. So I'm sure that will be in all of our fall tax updates.
You know what's interesting when we talk about some, there comes the slide. When we talk about some of this stuff, both during Katrina and last year in the California wildfires, we had these situations with these generous, what do I want to say? Not features, but, what's the word I want? Generous ability to withdraw, generous tax treatment. So this isn't new to the IRS. It's just now we're going to have it on a nationwide rather than simply a geographic area.
So when IRS is publishing their guidance for this, they haven't published official guidance yet. They are going to be looking at what they did during Hurricane Katrina on those tax-favored retirement distributions. If you want to see what that looks like, it's IRS Notice 2005-92. And then they're going to be looking at the part where the language is substantially similar. So if Katrina says something very different than what CARES said, obviously they're not going to use that guidance. What's interesting to me that I noted when I saw this, and I'm hoping IRS will tell retirement or plan administrators to do the same thing, is that Katrina said that for those distributions, Katrina-related distributions, is that plan administrators were supposed to use code 2, which was exception may apply on box 1099-R, box 7. So that code 2 for us would be like a bell that we need to reach out to the client about. I imagine that many software companies that we use for tax that we may rely on their questionnaire will have a whole COVID-19 section. Did you take a COVID-19 distribution? Did you receive a stimulus check? If not, that is something we know we're going to need to add. So what are the two requirements for taking this retirement distribution? The taxpayer or their spouse needs to have tested positive for SARS-CoV-2. I had originally written SARS-CoV-2. I don't know why it's changed to COVID-19, but whatever. Or you have a dependent that tested positive, or you experience adverse financial consequences as a result of being quarantined, furloughed, or laid off, or having your work hours reduced as a result of COVID-19. So, for example, if you're furloughed for COVID-19, would your state allow you to qualify for unemployment? And if not, and if it doesn't cover the bills, can you take the distribution? The way that the language is written now, the answer is yes. Under section, I took a quote here from the IRS page that I thought was really interesting. Under section 2202 of the CARES Act, the Treasury Department and the IRS may issue guidance that expands the list of factors taken into account to determine whether an individual is a qualified individual as a result of experiencing adverse financial consequences. And so, sorry, Evan, in prior years, they did not issue a 1099-G on recovery rebates or stimulus payments, and I doubt they're going to do it this year. However, if you have the ability to pull transcripts, it's already on 2020 transcripts. And to me, that says what that says to me, and I could be wrong. You know, I have a panel of brilliant people here. Maybe they know. And Kathy Morgan is in the chat. Maybe she knows. When I see, you know, they're going to expand the list of factors, what my brain thinks is that we're going to be having a list of questions we're going to need to certify on the tax return, or that the individual may need to certify to us on this, on if they experienced adverse financial consequences. I don't know if they're going to be like, oh, you have to meet these 2 requirements like they do on the employee retention credit. But I think that might create another due diligence situation, or another situation where we're going to have to ask some questions. From my understanding, for some clients who have already reached out to like T. Rowe Price, they're not asking questions. Their plan is just to issue a 1099-R with the early distribution in box 7. So again, that's going to be on us to do some more conversation with our clients.
But to be fair, those 1099s don't need to be issued until when?
January.
8 months, right? I'm sure between now and 8 months from now, guidance will come out to the custodians as the IRS thinks about this stuff. As you said already, some of this stuff is so fluid and so changing every day, every couple of days. At some point, someone's going to wake up and say, oh, shoot, how are we going to code this stuff? What do we need to do? My guess. But
yeah, like Henry, will the administrator go to code 7 for someone over 59 and a half? We don't know. We don't know.
What was your number? Was it 1 million people? What was?
Oh, how many people have already taken it?
Already, yeah.
From Fidelity, 160, almost 165,000 individuals have taken it.
Pretty much as soon as it was announced, they went in and took their money out.
Well, I'm just saying, so that's Fidelity alone, assuming they're the same size as Vanguard and Schwab, that puts you over 500,000 people.
Easily.
You know, and that doesn't, right, and that also doesn't include 401ks or anything else.
And Leah just put up something that's going to be quite scary as well. The forms themselves might be easy to do. If the IRS is going to put the due diligence on us, we're going to have 200 pages of due diligence questionnaires for our clients this coming tax year.
Well, I mean, could you easily see them expanding the due diligence form?
That's what she's saying. Yeah, so they're
not room
that's
for
what I
another
think.
column,
we're going to have to prove it. Yeah.
I also think that there's going to be there's a whole lot of things where there's going to be more rep work this year. And this is one of the unintended rep work things, is I think that these 1099s are going to get all screwed up or misunderstood or just generate CP2000s. And I want to take a power of attorney from anybody that has one of these, get it on file with CAF so that I get the notices.
Thankfully, a lot of people will be doing TurboTax returns this year, so it won't really be our issue.
So, tax and consequences, you know, like truth and consequences.
Hey, can I
individual
can I flip a poll before you run
yes.
through? Thank you, Fred. I was speaking to Ellie.
Well,
what counts?
Fred sometimes speaks for me.
I'm going to mute Fred in a minute. As he types, it was getting annoying there. What counts as an authority other than me and John Mellencamp? Regulations published in the Federal Register, tax forms and instructions, press releases and FAQs, publication 17.
The answer is Kathy Morgan.
But she's not a substantial authority.
The answer is Olivia Henley. Let's see, are there any questions?
A couple more of you need to vote, and we can close it up.
I like Mark's due diligence suggestion is at the end of the thing. Do you certify that everything you told us was true?
I mean, they sort of do that anyways. Isn't that what the perjury statement is? The jurat on the 1040?
Pretty much.
There is that. We all get nervous, right? Like, oh, boy, I better add a separate question for this. Remember when we were all talking about Affordable Care Act and we were doing all this due diligence for ACA?
Mm-hmm.
And I've had it come up in exactly one exam, ACA.
Okay.
All right, so I'm gonna wrap up our poll.
Lynn, we are going to talk about PPP and EIDL and how they play together, but in terms of forgiveness, I don't know if that.
So the vast majority of you got this correct with regulations published in the Federal Register. Pub 17 is not substantial authority. Press releases are not, and tax forms and instructions are not. We know from, I always get it wrong, is it the Bowbrow case, that New York tax attorney who relied on one of the publications about IRAs, and the judge said that absolutely not, that is the opinion of the writer of the pub. So yeah, so they are not authority at all. I guess unless you have a New York State audit. The last I knew, Phyllis may chime in on this, New York State relies on them to argue with you about audits.
Yeah, I think this is going to be messy. I think a lot of us are going to be in the in November and December taking a lot of classes and being wore out, which is why I'm sure some of you have seen the news that the White House is talking about pushing back the tax due date to September 15th. And I'm sure many of us will be like, we're being stressed out because it's more time on us, less time being taken off for people. It's a lot of work for tax pros right now. So just remember to take some time for yourself. Take a day off if you need to. Take the morning to sleep in. Take a bath if you like that, with a bath bomb and some wine and a face mask. It's very important to make sure that you're okay, because if you're not okay, your clients aren't okay. Okay. I'd like to talk about tax and other consequences now that I have done my self-care. You can't take care of other people unless you take care of yourself lecture that I stole from Fred. So the individuals are going to need to certify that they met the requirements for taking out the funds. And one of the things IRS said last week is that the 100K is an aggregate limit for all plans. You can't take 100K from one company, 401K here, and 100K from another 401 company there. Total across all. And remember, you can pay ratably over 3 years or roll it into a new plan. What's nice is that you can do the latter, the rollover into a new plan, on the last year and then go back and amend the prior 2 years, 2020 and 2021, to receive a refund on the tax paid on it. However, as Fred pointed out, you need to check with your plan administrator before you roll it over, because some plans do not allow rollover contributions. And then I linked to a nice article on Forbes about the retirement distributions. Thought it was a good article. And so 5 points to Slytherin for whoever can tell me who Tom Riddle is. So, for example, our Dark Lord took out $9,000 from his 401k to help him ride the COVID-19 furlough wave. He does not get the 10% penalty. Remember, these are being waived, but you should reach out to the plan administrator to make sure that they're not putting it on there. Tom has, 2 options. He can pay over 3 years. So in 2020, 2021, and 2022, he would pay on $3,000 each year. Yes, whoever said the name that shall not be named. And then, or he can just decide when he does his 2020 taxes next year, he would pay tax on the full 9K all in one go. So taxpayers have those 2 options. I think one of the things that we're going to roll into, and I know a couple organizations have said this as well, ASAP, excuse me, that we should be rolling into a more advisory role. And this is one area for tax planning that our advising role should pop up. I know, for example, that I have told a lot of clients in my emails and phone conversations with them, you need to start thinking about tax planning for this year. It's going to be complicated. And I know several of them have called to follow up to make appointments with Fred as part of the 2020 Keep Fred Employed Act.
Leave me alone.
So, yeah, I'm sorry. So Yes, Susan. Tom can decide to roll it over and deposit it back if he wants, but he might just have wanted to keep that money. Or maybe he decides that he's destroyed all 401ks and he doesn't want to deal with them anymore. But he does have that option.
Unless though the plan does not allow him to put it back in. So this is what we were talking about before. Make sure your plan will allow you to put that money back in over the next year, 2 and/or 3. Otherwise, you're going to be paying tax on it.
Or Fred, hang on one thing. I was thinking about that. Some of these 401ks and other pension plans let you take in-service distributions, right? But why couldn't I roll that money over into a rollover IRA at the end of the 3 years and still get the benefit?
I would think you should be able to do that.
I know. All right. I think so too. But again, no regulation. But that would sure seem to be the intent, right?
Yes.
So one other question I had in regards to this from an actually particular client, and I don't think they're going to be able to do this. Can they take a traditional IRA, take the 100,000 out, and then eventually roll that into a Roth IRA?
It would be taxable.
It would be taxable over the 3 years, but can he put that money into the Roth IRA? Like, I don't think that's a COVID-related scenario, so I would say no off the top of my head, because you have to have a need to take it out.
Well, I'll do a better one. What if I take the 100,000 out and put 50 into last year's SEP and 50 into this year's SEP and pay tax on a third of it this year? Anyway. There's going to be people with things like this going on.
Yes.
Yes, they can take the money out and then open a SEP. But
that was rhetorical, Ellie. I'm sorry.
I don't know anything about retirement plans. I don't even have one.
You will soon. I mean, know about them, not have one.
I don't know anything about them.
You will.
Kind of like how I don't know about NOLs, except I took Kathy Morgan's class on Wednesday, and I know a lot more now. Okay. Oh, all right. Okay, everybody, it's time to roll into the employee retention credit.
Yay.
Take a deep breath. So IRS updated questions 64 and 65 on this FAQ. And can I tell you again, these slides were different this morning because IRS had different things as of yesterday, which contradicted what was written in the Joint Committee on Taxation.
I actually had all of this stuff loaded into Big Marker, and Ellie sends me, "Oh, shoot, we need to change." And I'm thinking I like myself the way I am.
So we'd like you to change too, John.
What's the matter, Fred?
I said, we'd like you to change too.
Yeah.
So IRS addressed how an eligible employer may treat healthcare paid to employees not working. It is different if they have 100 employees or fewer, or more than 100 employees. If they have 100 employees or fewer, if the business has suspended all or partial of the operations due to the shutdown order, or if the business is experiencing a significant decline in gross receipts, remember the same thing that we see when we're determining if they get the ERC, if the employees are not working, but the business is still paying the healthcare counts toward qualified wages in order to get the ERC. And this is question 64 on the ERC FAQ. And I will link that in the chat box. And IRS actually sent out an email this morning saying, hey, we changed that FAQ, so here you go. So if we were to use an example for this, Tom Riddle has a bakery cafe called Dark Art Delights. He is under a Ministry of Magic order to close in-cafe service, and so he moves to Owl Deliveries via Uber Owl. He has 5 employees, and the sales have declined significantly. So he drops his employee hours to half of what they worked, but he continues to pay the full benefits. So his 5 employees, maybe they were all working 40 hours a week. They've now dropped to 20 hours a week, but he's still paying their health care because you need to survive the Dark Lord's wrath. The health plan expenses allocable to wages paid during that period may be treated as qualified wages for purposes of ERC. As I understand that, that means half the payment, half the health care plan expense can count towards qualified wages. Reduced hours, you reduce it same way. Not entirely sure. This is actually one of the examples they used. And then I just quoted question 65 on those who have more than 100, because I think it's similar, except that an eligible employer may not treat health plan expenses allocable for qualified wages. Only the portion of health plan expenses allocable to the time that the employees are not providing services are treated as qualified wages. This isn't Lord of the Rings, Mr. Watanabe. This is Harry Potter. How dare you not know?
He is dead to me.
Terrible. So I would take some time to go and read 64 and 65. IRS actually provided some really nice examples for each of them. And again, I'll link it in the chat. They just published this morning. So, and again, they had actually said something different yesterday, and then they changed it to be like the Joint Committee Taxation's interpretation. Couple other employee retention credit hodgepodge. The draft 941 is released. Qualified wages include the eligible employer's qualified health plan expenses towards the $10,000 cap. We just talked about that. IRS is going to issue more guidance for nonprofits on calculating loss of gross revenue, which is important because we just found out a ton of churches got a whole bunch of PPP money. You can't do that. Yes, the new 941 should cause all of us to raise our fees.
Bite your tongue, because are we going to see software in all the software providers ate these costs, right? This wasn't hey, next year all these rules change, right? All of a sudden, boom, all this changed. So you're going to see your software providers have less clients and less people paying, maybe because of the economy. And are all our fees going to go up? Just asking.
I think so.
Leanne Snow had a question about the PPP versus the EIDL. If you get the PP funds, you do not take the employee retention credit, but you are eligible if you did get the EIDL money. So the EIDL money does not preclude you from the employee retention credit. Ooh, hot off the presses.
Kelly Phillips Herb has a new article on IRS to speed up stimulus payments. Act now to get your check faster.
We give you breaking news as it happens here, folks.
What was interesting is if the eligible employer elected not to claim the employee retention credit in one quarter, they are not prohibited from claiming the credit in a subsequent calendar quarter, provided they meet the requirements. So they also have an option to go back and file a 941 claim for refund. IRS says for quarter one for employee retention credit, use Form 7200. However, going forward, quarter two, quarter three, quarter four, use the new 941. So, good stuff. And then IRS updated this last night. Excuse me, I'm going to sneeze.
God bless you. Gesundheit. Stop it.
Excuse me.
Okay.
I apologize. If an employer repays that PPP loan by May 14th, are they eligible to get the employee retention credit? Remember, if you take PPP, you cannot take the employee retention credit. So if you received your payment and you repay the loan by May 14th using the safe harbor, and you can take ERC going forward.
Now, up until the time you get the PPP, I believe we're allowed to get the employee retention credit, correct?
That's from my understanding. Like,
that's the way I understand it.
If you're going around paying people without the loan, like, why would they deny you that? That makes no sense to me.
I think it was up until we were quibbling over this, right? Whether it was up to acceptance or funding. And I think it's up until acceptance. Until you knew you were getting the loan, you had to stop taking the ERC.
So we can now go back and amend some 941s for that first quarter.
Yes.
Yes.
Yep.
So good time. This is now question 79 on the ERC FAQ. I'd linked that earlier.
Hey, can I pop up a poll?
Yes, let's do a poll.
Oh, actually, I don't need to. We're caught up. Never mind.
Are we?
Yeah.
Okay.
No. Well, it's the start of the new hour, so no.
Yeah.
Here we go. The CARES Act made which change to IRA distributions? The early withdrawal penalty can be waived on up to $100,000 of distributions. The tax on the distribution is due in 3 years. The tax is payable ratably over 5 years. The IRA distribution can be rolled over within 1 year.
That's a trick question.
No, it's one part of it is a bad choice because I
No, it's good. It was just tricky. I had to think about it.
Andrea Morrison, I'm not sure what you're asking in Q&A. Like, do you just want us to mention it at the end and everybody can talk? They ask, which states have paid out unemployment for self-employed people, gig workers? And they said not Nevada.
Well, one thing you have to remember is PUA, Pandemic Unemployment Assistance, which is new under the CARES Act, right? Previously, no one could, except maybe California, nobody who was self-employed could get any unemployment assistance. So part of PUA, though, is your state had to opt in. And some of the states, I think, didn't opt in.
Joseph has a good question. If they want to return the PPP because they're shut down and their employees want to stay on UI, can they repay it all and reapply later? I mean, from my understanding, we're almost out of funds for the second half. So, and Congress has already said they do not want to add any more funds to it. They do not want to do another refunding session. And
there's also that thing in there that says, I have not received another PPP loan. So technically, even if you return the money, you've received it. So that would be an interesting argument.
You know, Ohio just really opened up their PUA for self-employed people. So I don't know if anyone has done it. Oh, Oliver posted a really nice link on which states have already started paying unemployment to gig workers. Thank you.
That's awesome. All right, let me close this up. So the bulk of you got this correct. 89% of you said the early withdrawal penalty can be waived on up to $100,000 of distributions. Yup.
Answer B was the trick question, though.
Well, I thought D was the poorly worded question. So B, the tax on the distribution is due in 3 years. No, it's due over. You can pay it ratably over 3 years, but it's not due in 3 years. And the same thing with C. It's payable ratably over 3 years, not 5. But then Ellie has her finger up because I thought you were going to tell me you had your hand raised. So the last.
I did. They might have been confused because I mentioned that the state might require you to pay tax on the full distribution the year you take it. It all depends on what your state's going to do. I'm sure we're all going to be taking a lot of state updates at the end of the year as well.
Nah.
Well, someone we know is trying to get together people to start writing some state projects right now. So we might have a lot of great material. So the IRA distribution can be rolled over within a year. Here's why that's a bad question. The law says you can roll it over within 3 years. 1 year is less than 3 years. So in theory, that's a true statement, although it's not reinforcement of the law. The law is 3 years. So if we were grading a test, I would have to give credit for letter D. Okay.
Okay, rolling right along because we have mentioned our favorite loan of all time, the thing that we love so much, PPP.
Give me a P. Give me a U.
PPP PTSD.
Give me an A.
All right, this is my time. Shut up, guys.
I think I chose the best photograph for this.
Which house is that guy from?
I threw in a Star Trek reference just to,
TNG. So the next poll really should be Star Trek, Star Wars, Harry Potter. That's a good poll.
I think next time I'm going to make it all Silence of the Lambs.
Oh, good Lord. All right, let's get into the PPP. All right, safe
I'm down
harbor.
with PPP. Yeah.
We should have that background. So can we add background music to this?
We run bandwidth issues, but we could.
And I am also waiting for somebody to eventually take that green screen behind you and send it out to the internet for photoshopping and have you chased by dinosaurs.
You know, the problem is I have the lighting is wrong here. I need to buy a different piece of lighting, and the green screen works. The green screen works perfectly on Zoom. It just doesn't work on Big Marker.
Oh, good thing you got your money. This is the broadcast booth now.
Can you hear the Star Trek theme in the background?
Yes. All right. Safe harbor, people. Let's get back to business here. So it was May 7th, but they just moved it to May 14th that if the client returns the funds, they are eligible for the other payroll tax credit and options. That wasn't the only reason they created this safe harbor. Part of it was all those big, huge businesses getting the money when they really should not be getting the money, where they are publicly traded companies and they have access to other funds. This also applies to the smaller businesses who should have taken the money to begin with as well. So they're given the safe harbor rule here for them so that if they return it by May 14th, they're not going to get in trouble. All right. As of now, more than 42 publicly traded companies have agreed to return the funds that they have received. And obviously, most of that is due to public backlash because they have to publicly post these in their reporting. So that's how they were found out. It's necessary so that borrowers may promptly return the funds that were retained based on a misunderstanding or a misapplication. I've had discussions and debates and arguments with other tax pros who have indicated that if you have an S corp and there's absolutely no wages and no wages for the owner, the shareholder, which is obviously incorrect because of reasonable comp, so absolutely no wages were paid whatsoever, they've had clients apply for the PPP loan and get accepted. This is obviously a case where they can return that money and not be in trouble for it. Unfortunately, whether they get caught or not is going to be based on what the banks do and possibly an audit lottery type scenario. So this safe harbor so that they can return the funds and then they will not be in trouble if something happens. And the last one is the caveat, according to Professor Stephen Gillers, prosecutors are going to have to prove that the recipient understood what the government was really asking. And there has been a ton of ambiguity on this. And so based on that alone, they may be able to use the TurboTax defense on this whole, you got in trouble and shouldn't have taken the money. I guess over the next couple months, couple of years, we're going to find some of this out. We may even see some court cases on this. All right. New questions answered on FAQs number 43 and 44. That's on the one that just came out on May 6th. I put that link in the area earlier. I will put it up again. The FAQs here. And if we scroll down to 43 and 46, I should have had this pulled up already. I do apologize. 43, FAQ 31 reminded borrowers to review carefully the required certification on the application form. And this is a big area of contention. The banks are allowed to rely on the people they are lending the money to, and that they have certified to all of these different certifications that are listed in there. And on your loan applications, you had to initial these. At least in our case, we did. So you are certifying these issues. The banks were not required to rely on their due diligence. They're relying on you to do this. So there's another reason why we have this repayment date. Excuse me. Number 44, how do the affiliation rules apply with regard to counting employees? In this scenario, basically, your entire organization's employees are essentially counted into that 500 rule. So if you had more than 500 because of these affiliates, give you money back. Hopefully, a few of you guys attending here have that many. and you need to give your money back. Okay. Ooh, audits and fraud, as we were talking about earlier. 2 individual business owners have already been indicted. I don't think they're the type of people we were talking about before who, certifying, just going to take the money and they're ignoring the certification aspect, although that does, constitute fraud as well. These 2 individuals were emailing back and forth, and they were applying for loans for businesses that were completely and already closed. And I would like to point out to everybody, if you haven't noticed, I said Ellie's hair looks really good today. So just everybody complimented on her hair. I got you, kid.
I was saying that privately to you.
I paid attention. All right, so
I'm going to say the Alba Mango Shampoo works really well, ladies, if you have thinner hair.
John,
they're not
really
sponsoring today's webinar.
All right, talk about this. I'm supposed to be heckled by the group, not by the other presenters.
This is a conscious fashion choice.
You could try that shampoo for your beard.
All right. So SBA is definitely planning on auditing any entity that received over $2 million. So that's going to occur no matter what.
Now, Fred, when you say the SBA is going to audit, they're not going to come in and do like a tax audit, right?
I would imagine they would and they should. I'm not exactly sure what they're going to be doing.
Because I'm thinking they're going to audit the loan itself, look at the documentation that the lender has.
So that makes more sense.
Am I even going to know that the loan was audited?
Good point.
Now, of course, it might get referred for criminal prosecution. You should see what I stuck in that loan, but.
From my understanding, when I read the AICPA's summary of what's going on, they said that they will ask for your books and records to see what is being paid from the loans. That doesn't necessarily mean tax return, but they might want to see the tax return to see if everything matches up. But they are also going to want to see your books and records from when you asked the loan to see that if you met the I need the loan requirements.
Exactly.
Yeah, Kathy's commenting SBA asks for books and records. Well, that's, it's interesting. Having read enough of these loan agreements, I did not see in the Paycheck Protection Program loan documents the same thing that you have with a traditional SBA. In a traditional SBA, they ask for a review by an independent accountant, and they tell you that you'll have to turn over your books and records, a certain form each year. But I did not see that in the PPP loans. So just interesting.
All right. In reference to Donna's comment up above, Ellie will not be snatched up by university because we have the indentured servant paperwork on lockdown. So for at least the next 7 years, she belongs to Team BQ.
Yeah, BQ has my Horcrux.
That is correct. So, all right. I'm getting more coffee now. Thank you, dear. So we've gone over all the auditing. So there's going to be loans under $2 million that will definitely be audited as well. So this is all going to be fun to see how it shakes out.
I have an answer to a question that was asked. I went deeper into the FAQ. Can you get ERC after your PPP is forgiven or after PPP is over? And IRS currently says no. It is question 81 on the ERC FAQ, just updated yesterday. Regardless of whether or not the loan is forgiven, and you cannot take it afterwards. So that, I guess, is just one thing to think about if you're going to take PPP.
That's right.
Well, again, it's running the numbers, right? How much PPP can I get versus what would I get in other credits, ERC? It's interesting, too, that some of the banks are coming back with wrong PPP numbers, and you can't get through to anyone to say, hey, I disagree with your calculation. It's almost a take it or leave it, unless some of you are getting different experiences than I am.
Yeah, I believe during the EIDL process, when they say, oh, here's the amount we're going to give you, you can scale it back, but you can't do that for PPP. You can't say, I want less. And this is particularly problematic right now because you can't spend most of the PPP on operating expenses. And a lot of people aren't coming back. A lot of restaurants aren't opening yet. Even curbside service doesn't require the same level of employees. So,
are you ready for this conversation I had? I had a conversation with someone who has a restaurant. They closed up because they didn't want to, quote unquote, lose money. Round numbers, they're burning $4,000 a month right now. We looked at some numbers, and if they opened up, they'd lose $2,000 a month, right? And you know what the response to me was? Why would I bother?
Huh.
And I'm thinking, I'd like to lose less, but.
We have some restaurants around here that actually appear to be busier than what they were before. When we were calling to order for Mexican, it was over an hour wait before they can get us our food for takeout.
I'll do you better. The best, so around here, there's very little sit-down Chinese anymore. It's takeout Chinese and buffet. So the best takeout guy had been closed. He couldn't get some of his products. He reopened. I've called 3 times now, and he tells me, "Oh, Mr. John, call earlier next time. Too many orders." He's busier than all get out for his Chinese food. So, and he doesn't have seating anyway. So
some people have adapted and they're thriving in this in some ways. So, Dave, we're going to get to the interplay between the idle and the PPP in a little bit. So just hold on a minute, sir.
Yeah, we're actually we're
special guest over here.
We're going to run short here, so we need to probably pick up the pace a little.
All right.
Your hair is beautiful too.
Thank you, even though you said no, it wasn't in the other one. So, all right, more PP changes. Distributions after April 30th. No corporate group may receive in total more than $20 million in PPP loans. All right, considered part of a corporate group if it's majority owned directly, indirectly by a common parent. Common parent, of course, not clearly defined, so we can play it as we wonder. Order before April 30th, not subject to the new rule, any rule, not subject to any rule. Each applicant must contact lender to request cancellation of the loan if it violates this rule. So again, all of this falls back upon the person borrowing the funds and not the banks. Violations will result in the PPP loan being ineligible for forgiveness and subject to potential penalties. Idle changes. They announced more changes to the idle on May 7th, 2020. The limit went from $2 million, and this is for the loan portion, obviously, not that $10,000 forgiven portion, down to a cap of $150,000. Most businesses are now shut out for now. All right. Only agricultural interests may submit applications. All right. So everybody else, unless you're a farm, unless you're into the production of food and fiber, production for ranching, raising of livestock, aquaculture, and all other farming and agriculture related industries, you are now shut out. I believe still that the cannabis industry is not allowed, or are they allowed, John?
To do what, dude?
Not allowed.
They're not allowed to get idle loans.
Yeah.
I just wanted to catch John like he catches me all the time.
Just keep something in mind, though. The 2018 Farm Bill made
good coffee,
CBD and hemp legal, hemp with under a 0.03% THC content. So many of the businesses who are affected are actually eligible, because you just may have you may have to talk your lender through it and say, no, hemp is not marijuana, and the law did change, and push them along.
So, all right. You also have the SBA bridge loan of up to $25,000 as an option for the clients. And these are repayable over 30 years, I believe. Right, John?
Yep.
We have more on those at the end.
Deductions. This is what we've all been clamoring about, talking about, and what a lot of confusion is about. My position is one way, others are other ways, and we're going to see what happens. So many of us believe that congressional intent was that the deductions would be allowed. IRS doesn't interpret congressional intent, so they go by what they have on their books. And the IRS has come forth and said, no, it is exactly like tax-exempt income, so the deductions must be removed. Not that the income should be taxable, but the deductions removed, which in and of its own creates a whole myriad and a domino effect of issues. All right. Section 265 of the Internal Revenue Code disallows a deduction to a taxpayer for any amount otherwise allowable as a deduction to the taxpayer from income that has been deemed tax exempt. No double dipping. I personally disagree with all of this, but my opinion is not law.
Fred, let me stick one point in here because I've been thinking about your position. Now, in the Tax Cut and Job Act, they screwed up the drafting of the law. So 15-year property did not qualify for bonus depreciation. Do you agree?
Yes.
How many 15-year bonus depreciations did you take in the last 2 years?
Probably not many.
Right. So same thing here.
Mm-hmm.
It was wrong. They admitted it was wrong, but they didn't fix it.
Well, Congress, there is actually a bill now in Congress to fix this. So we will see. I was almost half hoping that it does not get fixed by Congress because I wish to see a tax court case on this about the true definition of what it is. My opinion is it's canceled debt. It's COD income and has an exception to it. Others are saying, and that's not tax exempt income.
Hang on right there. It absolutely is COD debt with an exception because the CARES Act specifically says it's not taxable. The forgiveness isn't taxable.
It's an exception. So that I don't believe that makes it tax exempt income. And I've had many arguments on that. And so I think Congress is going to fix it, but I almost wanted that tax court case just so I could see whether I was actually right or not.
Well, here's what I would suggest. Do your return that way. Attach an 8275 to it, disclosing it, and across the top right, screw you, I didn't report it.
I might just put screw you on it. Yeah. So.
Well, I don't want the criminal investigation people to come and get you. I want the audit people to come and get you.
I'm good with that.
Anyway.
Auditors are reasonable people.
Mostly. All right. Deductions paid for by forgiven PPP income are not subject to the deduction. Riddle me this, Batman. Tom Riddle received a PPP loan of $25,000. He used $2,000 a month to pay rent. Total equals $4,000. His annual rent was $24,000. Reduced by PPP, he's only deducting $20,000. What many people I've seen are suggesting or reporting the full amounts of some of these items and then having another, kind of like an add back to expenses not deducted. We're going to get more guidance.
Part 5 or something.
Something like that. Yeah, we're gonna have guidance on this. So it's we can speculate, we can make all these. This is what we're gonna do. But my main issue and issue is with many other people are the wages. If you're going to get a qualified business income deduction, and now you've got $50,000 in wages that are taken away, and that actually impacts your calculation and it factors in, that is where the domino effect is going to come in. John, are we good with poll questions?
Let's pop up a poll question, Fred.
All right. This is for Mark. This isn't for me. Mr. Hull, we got you.
Yes, he's sitting there with a little stopwatch. He's very concerned. If a client needs a transcript while the CAF is closed, which is an option? Fax the CAF for the transcript. The representative can use the IRS Get Transcript feature. The taxpayer, not the representative, can use the Get Transcript feature. There is no way to get the transcript.
Okay, don't try. What do we got here? And Ellie really likes that word, obliviate. I think Emmy needs some bacon, Ellie.
Yeah, probably. He's playing his video game.
I hope he's winning.
And Mark, the goggles are used when you go to the bars late at night. We're going to use the Google to get the guidance.
Hey, everybody, I want to close this up. Come on. 5, 4, 3, 2, 1. I'm going to close the poll. Boom. So real quick, close polls. The correct answer is the taxpayer, not the representative, can use get transcript on irs.gov. 93% of you got this correctly. A handful of folks think there's no way to get the transcript. For some folks, that might be true. The representative can use the get transcript feature. I think that's exactly the wrong answer, especially the client can come back and say you accessed their information incorrectly. You can fax the CAF for the transcript. Well, CAF isn't open, so that won't work. So, Fred, back to you.
All righty. Not the intent. We went over this a little just before. So not the intent. The Senate Finance Committee sent a letter saying non-deductibility was not the intent of the law. All right. And again, there is a bill right out there now. Hopefully it's maybe being passed now or early next week or denied.
It's just in committee right now. I put the name of it, the Small Business Expense Protection Act. So what you can do is contact your senator to tell them to vote for this.
All right. So the Section 1106I of the CARES Act provides that a loan recipient will not recognize taxable income if the loan is forgiven. In effect, this makes the loan a tax-free grant. Additionally, as was expressed to Treasury during the development, we did not intend to deny the deductibility. And this is the way I was leaning too, because when they talked about the EIDL, they specifically indicated the EIDL is going to be taxable. And they specifically also stated that the PPP loans that were forgiven were not taxable. It was this roundabout version that we got back to it that it was taxable. And I had many arguments, just because the deductions are removed doesn't make the loan taxable. I go, yes, it does. So it's around, if you're paying tax on an extra $50,000, it's taxable. What we know, and hopefully this is what we know now and what we know tomorrow, may be a whole different subject. All right, loan count, a lot. Lender count, a lot. So this is here for your summary. I'm not going to go over all of this, just that a lot of money has been handed out.
One thing you can take from the slide, Fred, is that compare it to the first round, all of a sudden there's a lot more smaller loans made. And I think that was intentional because they were all embarrassed by the criminality of what went on in the first round.
I 100% agree. And they also, what they did that first or second day where they said this day is strictly for loans under $200,000 or so, I believe, or more so. No, it's just the community banks were allowed to give out loans.
They had several different windows like that to make sure smaller lenders and smaller loans had an equal footing, and probably had the opportunity to think about it. That's how they should have done it the first time through.
Yeah. And I just did notice also, John, that when I click on the I on the questions and stuff for an individual, it gives me the ability to actually kick somebody out. How effective is that?
What do you mean to kick them out?
Well, if I click on the I, like on June, and the three dots, I can actually remove him from the webinar.
You can. And I've accidentally removed speakers.
You accidentally, or?
Well, when they don't have there's also a choice to ding you, to turn on your sound or your camera, and I've accidentally booted people.
Okay.
Danger, CE attendees, danger. We're going to be doing a section on how we understand the regulations as IRS has written them now.
Correct.
Remember, this can be changed. We've seen it be changed. It's very fluid. And there is no real regulations on how forgiveness is really calculated yet, except for Schedule C, no employee people. So we're doing math as we understand it.
Exactly.
Don't hold us to it. Don't come to us next week and say, but you said.
All right. Permitted use of PPP loans. Owner compensation replacement, income based on 2019 net profits, limited to $100,000 per employee. All right. Employee payroll costs are those costs that were strictly defined within the FAQs and in the IFRNs. Costs related to continuation of group healthcare benefits during paid leave, sick, family, or medical. You can't get payroll credits for these if you've used them for the PPP loans. You cannot count the wages under the FFCRA, where they get tax credit either. So if you use these things for any other types of tax credits, tax certificate, whatever it is, you cannot use these also for the PPP loans. Business rent and utilities. You had to have the contract in place in 2019, so it had to have appeared on your 2019 return. So you can't suddenly have a new one in 2020 and think you're going to get a deduction for that. That's not how the rules are written at this time. At this time also, it is our understanding that expenses on your Form 8829 are not allowed for forgiveness. All right. Some people are arguing otherwise. It is our belief that they are not included. Can use the PPP to pay mortgage interest, but not principal. Once again, not the home office. All right. These must be loans and things incurred or created prior to February 15th, 2020. So if they weren't in place prior to then, you're not going to get this forgiveness. If you received an actual idle loan, all right, between January 3rd and April 3rd, 2020, so you jumped in real quick and had one, if it's not used for payroll costs, it does not impact your eligibility for the PPP forgiveness. If you did use it for payroll, then that must be refinanced into and with the PPP loan as well. The idle advance from the grant portion is going to be deducted from your loan forgiveness amount. All right. Tom Riddle owns Horcruxes R Us, right, Ellie?
That's right. You got
As
it.
an antiquities shop. He gets a $25,000 PPP loan and also receives a $5,000 idle advance for his 5 employees. The $5K is going to be deducted from the forgivable amount of the PPP loan. Tom kept very good books because he hired excellent bookkeepers to do his work. And he's going to get all $25,000 of the PPP forgiven. He's going to subtract that $5,000. So his maximal forgiveness is now $20,000. That remaining $5,000 is now a loan under the PPP program, and it's subject to the 1% loan rule. Maybe, maybe not. Is it also due after 2 years? Maybe, maybe not. We're waiting more guidance. Our expectation is that it's going to be that 1% loan payable over 2 years. 2575. Not more than 25% of this loan can be spent on rent, utilities, interest, or the interest on mortgages. This is also an area, I believe the same bill that Ellie says is in committee, that they wish to expand that as well. So we have not heard the last of the 2575 rule. So Tom still owns Horcruxes R Us. It's a retail shop. You can get whatever you want there. He receives his loan of $50,000. $2,000 a month for rent, $1,500 a month for utilities. His maximum allowable for non-payroll is $12,500. He has a total of $7,000 for rent and utilities. That's covered. Now, you don't need to do 75 for employees. 100% of your money can be spent on employees, and that will get you forgiveness. You don't need to use it for the rest. So while only 7 of the 12,500 is covered, they can make that rest of that up with payments to employees. His forgiveness. Let's pretend he's a sole prop, run out of Tom's home. So there's no rent and no utilities. So we're changing this from the last slide. He's now in 8829, no rent, no utilities, and his Schedule C is $100,000 at line 31. The max loan is $20,833 and change, which is the 100 divided by 12 times 2.5. So even if Tom's net income was $200,000, his max loan is still just the $20,000 and change. For Schedule C's, forgiveness, both the loan amount given and the forgiveness portion for the employer's wage portion is based on the 2019 tax return line 31. So that forgiveness is going to be the $100,000 divided by 52 times 8. So that's going to give us about $15,384 of max forgiveness. So he's going to owe that $5,400 back at the 1% for 2 years. I don't know if it's stated or not, but let's pretend Tom has 5 employees as well, and he's paying them. Tom's forgiveness is based on the 2019 Schedule C. I'm going to pretty much believe that the employee's portion forgiveness with the actual payroll is going to be 2020 numbers. All right. Employees and forgiveness. Obviously, now more than ever, you want to keep careful track of what you're spending. You want to document your stuff and keep them in a nice file. Based on IRS guidance on deductibility, how much is coming out of the PPP funds? If you do your own payroll, make sure you prepare them properly. All of the major payroll providers out there have adapted to the forms for this and will give you really nice forms for your documentation. You got to make sure you track your FTEs and the pay rates your business had during the 8-week period. You must maintain 75% of the salary. What counts as payroll? Again, all this is clearly documented in the FAQs and the IFRNs. We're going to go over it here. Gross salaries during the 8-week period. Currently, it now begins on the funding date. All right. So a lot of people got some money today or yesterday. So that 8-week period starts from today or yesterday going forward. For now, there is discussion to change that. Again, these restaurants, they don't have all their employees back. So if they're running and getting their money, how are they going to have full employment? All right. Must be limited to $100,000 per employee. Commissions are included, cash tips, vacation pay, parental, family medical, or sick pay is included to the extent it's not covered under a different type of program. State and local taxes that are based on employee compensation. So not your state withholding. We're talking your state unemployment amounts. Group healthcare premiums and retirement benefit payments. Okay. All these must have been paid during the 8-week period starting from the day you were funded. Some guidance out there is if you normally make a huge retirement payment in December every year or on October 15th with the filing of your return, and you do it now, there is belief that the IRS is going to say, no, that does not count now. They want you to do things as you normally do things. So don't suddenly start changing the way you do stuff. FTEs are not just for the ACA anymore. All right. It basically becomes a math problem. And we all have those old 10 keys, I believe, on our desk so you can do some math. At least 30 hours to be considered full-time. FTE numbers, and this should be based on your normal work week. So if your work week is 40 hours, normally for your people, then you should be using 40 hours. If you use 30 hours, you can use 30 hours.
Hey, Fred, let me stick in. We're just about out of time. Let me stick in the poll in case people need to go, because we did tell them 100 minutes.
Okay.
All right. The IRS has interpreted the following to be the correct treatment of a payroll protection program loan. It's not taxable, no effect. Only the forgiven part is tax-free. The repaid part is taxable. No expenses paid with the loan are deductible. So again, we're asking, what has the IRS interpreted the correct treatment of a PPP loan to be?
All right. Marissa asked about bonuses. If you normally give bonuses out, that's the normal part of your business. We as tax people give bonuses after tax season. So we don't always give it on April 15th. Sometimes we wait till May.
But let me call Mark Hull out on this. I know he's in the thing today because he asked the question on Facebook, which is, what if I normally give you a $5,000 bonus and I'm a weekly payer? I give you $5,000 today. Based on the argument that you're supposed to extrapolate out for the year, do I lose that payment because now I pay you $260,000 a year? Right?
Yeah, that's well. We're talking about people who make less than $100,000 to keep it.
Well, I'm sure this employee did. My point is that by giving a generous bonus, like you just said, we give bonuses at the end of tax season. Sometimes that's a considerable amount of money. And if you can't think of the word I want, but if you make it into a year, what would it be over a year? Maybe it's too high.
And again, that's going to be guidance that they're going to put out, because I'm assuming that those people are going to do that.
Hey, I want to close this poll, Fred, but maybe you want to address it real quick, because the answers were all over the board. The IRS has interpreted the following to be the correct treatment of a payroll protection loan. So the correct answer is only the forgiven part is tax-free. I'm sorry, the correct part is no expenses paid with the loan are deductible. That's the IRS interpretation. What about
for the forgiven part of the loan? So if you pay expenses for the part that's not forgiven, those you can deduct those.
Right. Oh, right. But that, of course, that wasn't one of the answers. Only the forgiven part is tax-free. The repaid part is taxable. Well, no. Logically, if I repay a loan, it's not taxable. And it's not taxable, no effect. Maybe that was Congress's intent, but that's not the IRS interpretation. And right now, that's where we're at, is with the IRS.
Okay.
So, yep.
And we're going to come back and we're going to answer any and all your questions that you still have at the end, but I'm going to guess, because we're running out of time, go through the rest of the slides now so we can let those people that want to leave when they want to.
If you've been on since the beginning and you answered 6 questions, by all means, call it a day if you have to go. We will post this to YouTube as soon as it processes later tonight or first thing tomorrow morning. Oh, go ahead.
All right. So Tom Riddle has 2 employees who work 30 hours a week and 2 part-time employees. One works 15, the other 20. All right. 35 hours divided by 30 plus the 2 full-time employees. Those 2 part-time equate to 1.16 FTEs. So if we round down, we're going to say 3 FTEs. There is, under the forgiveness portion, there is a portion now that says you must have similar or more FTEs in the current year than you had in the prior year for the periods. Again, subject to change. They're looking to get around that. So we're gonna have some more guidance coming out. Right now, currently, we're finding out that when people are reopening, they're asking employees to come back. Employees are making more on unemployment with the pandemic unemployment insurance as well. They don't want to come back. So they're getting the $600 plus they're making $1,000 a week, where before they were making $450 a week, whatever, working at the restaurant. They don't want to come back. So what employers can do now and instructed to do is to get in writing, request the person come back in writing, and have them reject that in writing as well. That will not count towards your FTE. It will not be a negative when we calculate the FTEs at this point. All right. You're going to compare the FTEs in your 8-week loan period to the FTEs for a baseline period in 2019. So if you funded on May 1, the 8 weeks is May 1 to June 26th. So your baseline period can either be February 15th to June 30th, or 1/1 through 2029, whichever has fewer FTEs. Ellie, can we use the entire year of 29 as our FTE calculation for prior year?
No, they have 2 baseline periods.
So we either have to, these are mandated. You must use the February 15th to June 30th or the 2 months of 2020. So basically you're going to go ahead.
We've been getting a lot of questions on how PPP and EIDL, if you get both, what to do. I'm posting a link from a really great article on advice on there.
Oh,
that really needs to, did we decide, can we get an hour out of that if we threw in some examples and took people through it line by line?
The problem is we don't know exactly what forgiveness is. Well, I don't know how you're going to get CE out of it because it's not federal tax law.
Yeah, it could be one of those ones that we just do, a talking point and just do it for however long it lasts.
It would. Well, let me say this. NASBA would allow it, so the CPAs would get credit, the enrolled agents would not. So we could, and the PTIN holders, we could still do it. So if you think, why don't you think about it? If we can get an hour out of it with a really good example of Mr. Riddle.
And let's see what guidance comes out in the next couple of days.
Yep.
So all right. So you take your employees from your 8-week PPP period, divide by your base, and you do it again for base 2. You want to do the largest one. If you are a seasonal employer, you are required to use the February 15th to June 30th dates. Back to Mr. Riddle. All right, the baseline period.
Dreamy.
What's that?
He's so dreamy.
All right, ignoring her. 2 employees at 40 hours a week, 2 part-time, 20 and 25 hours per week. So the 45 hours for the part-time divided by 30 equals 1.5 FTEs. So we've got 3.5 FTEs for our baseline. So now we have 2 employees at 40 hours a week during the funding period, and the part-time employees are only 10 and 12 hours now. So now we've got 2.55 FTEs. Your loan forgiveness now is reduced by 33%. So if you had a $30,000 loan, you are only eligible for 2/3 forgiveness on that loan.
And
Again,
that's the 3 divided by the 2.
Exactly. And again, this is subject to change. They're looking to, I think, eliminate or make that a lot more lenient. Good faith. SB announced the good faith rule, and this is what we talked about just a few minutes ago, who do not want to return to work. Keep copies of your documentations, all right? You have until June 30th to rehire the employees or reverse any pay cuts. If you offer the employee employment and they don't come, you do not lose the FTE reduction. What might...
Oop, sorry.
Stop it. Required documents. What might they request? They're going to look at your 941s. They're going to look at your payroll reports. They should be requesting canceled checks. Heck, if I'm the bank, I'm asking canceled checks for the employees as well, or proof that it was paid. Canceled checks for rent, utilities, and your other loans. Copies of your 2019 returns, and a whole bunch of legal certifications that you are going to certify to.
Gusto did say that they have set up their payroll for helping printing out the necessary reports for your payroll forgiveness. I guess you'll go in and select the payroll PPP forgiveness module, and they'll help you with that. I know the payroll company I work with is setting it up too. They're making all reports available online. Your forgiveness packet's going to be pretty big unless you're Schedule C sole proprietor. So this is going to be some time. And they also want to see your books, which is why, for example, a lot of people have suggested that you move the money into a separate account so that you have another line showing where the money comes out of.
Yes. So, yes, Diane, ADP and Paychecks and all the major and even the smaller payroll companies are going to provide reports for the employees. If everything is paid by direct deposit, your bank shows that it's paid to them. So yeah, direct deposit will match your payroll report. So you should be easily able to prove that. And if you're using a provider other than yourself, then they have direct deposit reports as well. All right. So as we said, they're re-examining forgiveness to make it more flexible.
Yes, Congress has said that they wanted this pretty much to be completely forgivable. This was in a New York Times article I was reading yesterday. They wanted to be completely forgivable. They didn't want the forgiveness process to be difficult. They wanted to keep these businesses going. And actually, a business owner, I believe in Oregon, is already suing the Treasury Department for making the forgiveness too complicated.
I believe they want the documentation there is more not to prevent forgiveness, but for those that are committing fraud and taking care of that aspect of it. So your next steps, this is where you provide value to your clients. All right. You want to start working now with the clients of yours that have the PPP loans and help them be ready for this forgiveness portion. Work with them to get the documents ready and teach them how to save all those documents, what to do. Reach out for them or have them reach out to the payroll companies. You're moving into an advisory role here. You should be taking, if you're on here, you're already taking education. Keep taking education, especially with us. Keep taking education, monitor the websites, monitor the Treasury, make sure you are kept up to date on a daily basis as this changes constantly. We have handouts, our Excel files for forgiveness calculations. There's lots of forgiveness Excel spreadsheets out there on the web. Find them, use them, get them to your clients. Be proactive. Don't be reactive in this scenario. All right. Alternatives. The bridge loan, as we discussed earlier, that's capped at $25,000. That's a 30-year loan with a very low interest rate. That may be what you need. Look into that. You have the SB Express loan, all right? That's limited in what it can be used for. That's a 36-month turnaround. That's a little bit higher interest rate. Okay. There are other funding options. There are companies out there that like Zapier that have a small fund for small businesses. Salesforce, Goldman Sachs, local banks. Look around if you need funding. There are options out there. Ellie mentioned Gusto before. They have a list including state and municipal relief options. So look around, and I'm sorry, Donna, but you are the advisory role. Get used to it. No vacations for you. All right. Resources for your overloaded businesses. We're not overloaded. Tax season doesn't end until July and possibly September 15th now, right?
It never ends.
All right. So TENA has created COVID resources for tax pro websites. You can click that link. Always look for updates. There's going to be contingency plans for reopening out there, more advisory services. So these are opportunities to actually make more money. We couldn't bill for loan applications, but we can certainly bill for assisting clients in helping out. In many cases, limited, assistance that we're going to be giving for free. But if they require extensive work, absolutely bill for it. Take time off now rather than November and December, because there's going to be a whole bunch of CE you're going to need back November and December time. And of course, they're not going to make these laws. They're not going to change these laws until probably like January 20th. So we're in the middle of actually tax season next year, taking courses like we've done these past 2 years. Upcoming webinars. Take it away, Ellie.
So we have some upcoming webinars. Just an FYI, as John said earlier, today's webinar will be available for replay on our YouTube channel. He's going to get it up this weekend. Poor John, we're overloading him. On Wednesday, Kathy is going to be giving her part 2 of NOLs. This one's on the CARES Act. It's the client's money and they want it now. She's going to be doing a replay this Monday, the 11th at 3 p.m.
Hold on.
It's the Millennium
Falcon on a green screen.
Next time I'll do Star Wars.
And let's be clear here. This is not John doing more work. This is Nicole doing more work. And the more that John lets Nicole do, the better off all of these are going to be as we move forward.
Mark Dombrowski saw this someplace and sent it to me as a gift. He thought I'd like it. He forgot to put a return address or his name anywhere in it.
Speaking of Mark, he has representation courses. He's going to be doing a whole series of representation, I believe 30 CEs. Is that correct?
Yeah,
John?
30. Yeah.
That's a lot of heckling.
That's a lot of courses.
Representation, education, experience.
It's coming soon. And then Fred and I are going to be doing a Tax 101 summer series. The first class is Wednesday, June 3rd on filing statuses and dependents.
So that summer series is going to be, it's geared towards a lot of the beginners so we can get them up to speed, but it's going to be great refresher courses for the intermediate and advanced professionals as well, because we've been on these groups and just filing status, even among some experienced people, it's crazy. So we're going to be going over all of that stuff.
We'll be spending time on head of household. And keep in touch with us. There is a COVID-19 best practices for tax pros and tax offices on Facebook. A lot of this stuff pops up there. So keep an eye. And then Tax Practice Pro, as we said, has more CEs. There's our YouTube channel. And then a closing thought, the pessimist complains about the wind. The optimist expects it to adjust. The realist adjusts the sails. It's a very nice photo. And then before we go
on my own without you.
Yeah, you did some great job on like the 5 slides you did, man. You don't need me anymore. You can millennialize Kathy's.
Now, John, all attendees, all the people on your email thing will get emails about the upcoming seminars as well. Is that correct?
Yeah, so you're all in MailChimp, so you do get emails. Also, just a quick word, in addition to that stuff, Our live international program and the live the Trust Me program had to get canceled for May because New York State doesn't let us meet in a group of more than 4, would become a totalitarian state, right? We're not allowed to have public assembly. So both of those things were in the process of migrating to the web. I've got to get everybody on board, but Kevin says he's going to do it. So we should be able to do the trust one.
So what I want to say is happy Mother's Day this weekend for all the moms out there and all the mom figures, the grandmas, the aunties, the single parents, the uncles, the family members who are stepping in and filling that role. Hope you all have a wonderful weekend and that your family takes good care of you. And then we have a course evaluation. The link is there, but I believe we will send an email. Please complete that. And I guess now we have time for a little bit of questions. John and Fred, do you want to take 5 minutes to answer some questions?
We'll stay as long as they want, as long as John wants to.
Anybody who wants to go, if you've been here the 100 minutes and answered the questions, you've got your CE. Feel free to call it a day. But yeah, questions we're happy to do. Go.
There's a question that keeps popping up. I sent it to you guys in private chat. Can a single shareholder of an S Corp get PPP? I believe the answer is yes.
If they have payroll.
If they are on payroll, if they just took those distributions, lame. And then Cheryl wants to know if payments are made for amounts accrued prior to the pay date or just from pay date forward, what counts in forgiveness?
Cash basis taxpayers. So it's the day, I believe it is the date you pay those wages.
Correct. I mean, it's not supposed to be, it's supposed to have been incurred and paid in the period. So like Dave asked a question earlier that like I got funded on the 3rd, pay period though was for the week ending the 5th, and I pay on the 7th. Does it count? I say yes, right? Mm-hmm. Because most of it occurred or some of it occurred in the current period and it was paid in the current period. But let's say that I didn't pay my people for January or for February and March, or March and April, March and April, because we're going to get this money. I don't think you're going to use that for forgiveness if I pay the March and April payroll the day I get the PPP money.
So let me ask you this, John. We pay a week later. So last Friday ended our pay week, and we got funded on Thursday, and they get paid on Friday. Does that Friday count? I'm putting it in my calculations, I think.
I would include it.
I'm doing cash basis.
Just obviously, though, it can't work both ways. So right. If you're only going to put, if you're a weekly payer, you're going to put 8 paydays in there.
Correct.
Yeah. All right.
Yeah. As long as you get the 8 and you're not putting in 9 or 10.
Oh, no. So the last week might fall. There might be 1 week that completely falls in the funding period, the 8-week funding period, but you don't pay till the following Friday. I would not count that week.
Right.
Yeah.
So it's 8 weeks, so it should encompass 2 months, and the same thing goes with rent, because we knew we were going to get funded, and we were saying, well, do we not pay rent for a couple of days, pay it late? But that's going to give us 3 rent payments in there, and that's not proper within there. So, you're only going to get the 2 months. They're not going to let you get a third month of rent into that calculation.
Right. Now, James has a question for a one-person shareholder of an S Corp or a sole proprietor C Corp, which to me are 2 separate questions. And they received a PPP loan, how do they take salaries? Well, your S Corp person should be on payroll for reasonable comp. Your Schedule C person, there's varying opinions here. Some of them are that all the money is just going to magically fall off and be forgiven. Some of us think maybe you should put the money in a savings account and draw out, or leave it in your business checking and draw it out 1/8 a week for 8 weeks. Keep in mind, a Schedule C person is not going to get 100% forgiveness because of the way forgiveness was written by the SBA for them.
Yeah.
I have a question here from Lynn. She says, let's say she received a $1,000 EIDL grant. Then she received a $22,000 PPP loan. Then she gets a $76,000 EIDL loan. If she takes the $76,000 EIDL loan, does she have to immediately use a portion of those refunds to repay the $22,000 PPP loan?
Did she get that EIDL loan before April 3rd?
No. If she gets it now, then my answer would probably be no.
And don't use a payroll that you're using for the PPP forgiveness.
Remember that when we passed this pandemic law, there was an SBA 7A and an SBA 7B loan program. In order to maximize the number of lenders, the federal government in the CARES Act basically rewrote those two programs to fit the pandemic, so the banks and lenders were already in place. So that April 3rd date is a magic date in a couple of things, but basically you're talking about the old EIDL and the pandemic EIDL, and that's the split date.
And remember, the Schedule C sole proprietor, never mind. Someone else answered it. I apologize.
Okay. S Corp takes payroll only in December, gets PPP in May, and immediately writes the check forgiven. I am not 100% positive on that, Susan. To be fair, when you have payroll, we're really not supposed to be writing checks once a year for these S Corp people. You're supposed to be doing that periodically. So if you're doing it once a year, you are truly not in compliance. Many of us do that. You know, I have clients that do that too. So what the IRS is saying, what people are saying is it should be your normal way of doing business. If you normally fund your retirement plan in October, right before the deadline, they're saying that really shouldn't be included in the forgiveness if you paid in March and May 15th. Same thing with that payroll scenario, possibly. You know, if it's me, I'm going to write that check, obviously. And you know, I'm not going to hide anything, and I'm going to make them ask the questions, but that may be denied.
So a question popped up about Schedule C forgiveness. You know, that's pretty much out there, that documentation.
Yeah, it's IRS Guidance from April 27th, which is still on the Treasury website. They're just add the Q&As to it. I think for us, all they're going to ask for is the Schedule C from last year, because it's just a formula.
It's a line.
31 divided by 52 times 8. Now, if you want to protect yourself, you know, move it into a separate account and move, you know, an amount over. So, for example, if I got a $6,000, like a $6,700 one, my max forgiveness is $5,000. So I already know that I'm going to owe a certain portion back. And
it's already calculated. It's done. Your forgiveness yours is done because it's Schedule C.
Because I mean, like for someone like me who's just a Schedule C, or someone else who's just a Schedule C, your line 31 is your wages. You know, what are you spending it on? Clothes, your rent, what, you know, your mortgage, whatever. And we already know you can't use the in-home office deductions. So it's pretty simple for them. Bank of America has told my client that they're going to want to see his final 2019 Schedule C. We gave him a final in the application process, but they'll just want to see it again.
So remember that
they might want a transcript, which will be really interesting because we'll all have to walk our clients through get transcript.
When we're talking about these Schedule C people, we're talking about Schedule C people with no employees.
Correct.
Right? That's the 8/52. And part of the SBA argument is they don't want people to get a quote-unquote windfall. And I am so hurt by that choice of words that's what they're choosing to use to say these people are getting a windfall. But if they have employees, the calculation is different, obviously. It's the 8/52 plus all the other, you know, 3/4 of the used to payroll, etc.
Yeah, James, from our understanding and from the way SBA has it, if the office if they have an office that's not inside home, if they've been renting it as of like it shows up on their 2019 return, it counts toward the loan amount, but not the loan forgiveness. That's the way the documentation was written 2 weeks ago, and they haven't updated the language.
Okay. Mark had a question, and if you're one shareholder S Corp with proper payroll, health insurance, and I'm going to add retirement in there, is that included in the forgiveness? I'm not sure, but I thought I read somewhere that retirement for owners and health insurance for owners are not included. Am I correct, or am I just thinking that I read something somewhere that I didn't read?
What'd you say about owners?
That retirement and health insurance for the owners are not allowed.
On a single member, on a Schedule C, no.
What about for an S Corp? Because they use the term owners.
Right? Where'd you see that?
I forget. I just remember reading it.
Well, hang on. Remember that where do we put if you're doing the return correctly, where is the health care of the S Corp owner, the 2% or greater shareholder.
There's some debate on that. Some people put it in under health insurance. Some people put it as wages.
And they would be wrong. And they would be wrong if they put it under health insurance. It belongs in box 1 of the W-2. The Internal Revenue Manual says you lose it at exam if you haven't done it that way. I think.
Well, on the W-2, it is in box 1, but on the 1120S.
Oh, well, forget that. Think about it. If it's in box 1, what have these lenders been lending us money on?
Mm-hmm.
Right, the W-2s, so, and the 940s. So I think you would. I think you're ending up getting a loan on it anyway.
Oh, I heard it from Leah because she read it to me this morning.
Okay.
We have story time.
Angeli asked where we return payments to. It's in the front part of the slides, but I just posted the link into the chat box. The addresses are question 41 in the FAQ.
Or you can use Venmo and send it to me, and I'll make sure it's taken care of. What?
Okay.
And Tim Mansour had the question about the ERC and the PPP that we talked about earlier, which he obviously wasn't listening about. You can use the employee retention credit up until the time you get funded for your PPP.
You know, to be fair, when we tease people, it's people we know in real life. So
exactly.
Yeah.
So.
Did we answer Chris Fitzsimmons' question? Any new info on the paid and incurred verbiage? If the first payroll after funding covers a period before the funding, does that count, and is it adjusted? I think, Fred, you said cash-based player.
We don't know. That's what we're using. But if Chris really needs an answer, he can call my office and speak to Johnny, and Johnny will let him know.
The point, though, is that you're not going to have 9, right? So
right.
I would be consistent, right? So if I'm a couple of days in, it's not a full pay period. I guess if you're going to prorate it, I'd prorate the last one too and get 8 weeks of payroll in there.
Now, one thing that I have been telling clients, and it's a lot different out here in California than in New York. In New York, we have mostly weekly payrolls. In California, there's a lot of biweekly and monthly payrolls. And so I'm having the clients out here switch to weekly payrolls. Definitely not monthly, but biweekly you should get your 8 pay or your 4 pay periods in as well. But these are just things to consider.
One thing I go back to too with some of this stuff is that I envision that the person who is going to be working on my forgiveness calculation, the person I have to prove this to, is going to be a 22-year-old newly out of college, working by himself at home as a contractor, and he has a checklist to work off of. So there's going to be no way of explaining it, no way of getting it through to them. So I want the packet to be as self-explanatory and easy to follow as possible. And maybe I'm being unfair and unjustifiably negative here, but
we need a correction, John, from the health wages in that box 1. Julie Presley chimed in, and she's pretty sharp and said that they use the Medicare wages. Box 5 is what they're supposed to be using. And on the right hand side, she posted the words of what we're supposed to be using.
Okay.
So,
and you haven't seen any of these loans be done wrong.
No. So that health insurance, the health thing of an owner, I believe, is still an open question. I'll find out where Leah had read that to me earlier today and see if we can't email that to people if it's not included. As of now, we're going to assume it's allowed. If for some reason it's not allowed, we can shoot out an email or post something up or post it on the YouTube page or whatnot.
Andrea, I just posted the link in the chat box for Kathy's NOL class on Tuesday, but on next Wednesday. But if on the Big Marker website are the rest of the webinars too. The webinar registration for Mark Dombrowski's representation course is not live yet, and neither is the Tax 101. That one's not live yet, but ideally we're going to have it live soon.
Tax 101 is you're going to get an email just to confirm some dates, and then it's going to be live. So when we get an email out this weekend, we're going to start collecting some coin.
Cool. All right. Well.
All right, everybody. We're going to call it a day. And if you need anything, Ellie at bqtax.com, Fred at bqtax.com.
BQ Tax Pro.
BQ.
We are tax pros, people.
We are the BQ Collective.
If you have
Coming
anything nice to
soon.
say, John at Tax Practice Pro, complaints, Fred at bqtaxpro.com. We divvied up the work very nicely. So,
Thank
everyone,
you.
happy Mother's Day and have a great weekend.
We appreciate you guys. Thanks.
Bye.
Where's that end button? I hate it.
It's hiding, actually. I was looking for it myself.
Thanks, everyone. Happy weekend.
It's not letting us end. Oh, here it is. I got it.
Happy Mother's Day.